What's up, traders, and welcome back to M.I.C Forex. Welcome back to M.I.C Forex. Remember, I told you M.I.C Forex, or M.I.C means money in candles. Money in candles. I believe you guys are finding our videos exciting, educative, and interactive. I've received so many of you coming to my website. I must congratulate you for that. And for those that we're working together, I must say that you guys are doing a good job. You are just doing a good job. Now, today, I want us to look at another very exciting concept in Forex trading. Remember, we are still doing price action. We are still doing price action concept. We want to mold it together into a strategy. And for your information, every concept that I've taught, starting with trading pullbacks, trading a bounce, all of them, if you can master one and run with it, then it's going to be very profitable. It's going to be very profitable. Remember, I said for you to be a successful trader, of course you need yourself, but you also need a good broker. You need a good broker, a broker with the fairly competitive spread, one that is not going to be allowing unfair commission and unfair swaps. So for that purpose, M.I.C Forex, we partnered with PU Prime. PU Prime, you will find the link on my comment section, or you can also go to my website, that is micforex.co.ke. Then you can be able to open your account from that particular website. Now, let's go into today's video. And I've said today I want us to talk about trading of patterns, or pattern trading, trading patterns. Now, what is trading, or what are patterns in Forex trading? A pattern is a symbol, or this pattern that we're talking about here, this is formation of a particular, an object. The price action moves in a way that forms an object. Like, for example, we know this one is a triangle. All right. Is that a triangle? Yes, this one is a triangle. We also know that this one is a rectangle, like that. So these are objects, but in Forex, we call them patterns. Like, for example, we have, if you go to your browser and then you try to check patterns in Forex trading, you'll find like hundreds of thousands, many of them. There are several of them. I'm going to be picking a few. I'll name a few here. Then I'm going to be picking two only. I'll discuss with you only two. The rest you can do it for yourself, or when we get time in the future, we can still go and look at it. When we get much time in the future, we can still go and look at it. So trading patterns in Forex, trading of patterns. Someone told me that my notes usually very small characters, so today I've tried to increase it to 16, or I can increase it to 20. I think that one is purely visible. So trading of patterns in Forex means, or comprises of price forming symbols, price forming symbols and objects that resemble certain patterns in real life situations. So for you to be able now to pick a trade using, I think this one is too huge, let me use 14. For you to be able to pick a trade, you liken. So traders tend to liken these objects these objects with the price movements, with the price movements, they take decisions. Another trader, they take decisions based on previous previous price movements or price activities, price actions. I think that is a correct word there. They take decision based on previous or historical, Remember, this is to say that you want to say, for example, if the price forms what we call, for example, is that a falling wedge? Yes, a falling wedge. You want to say that if the price, forms something like this, such that you can draw a certain object here, then you say if it drops to the downward, then you wait for, for retest, then bearish engulfing candle. If the price now comes to drop to the upside, then you wait for the retest, then bullish engulfing candle. Many of these patterns or objects that we are calling patterns, they're usually like not certain. I mean, you really don't know which direction the price might take. So it's half chance. It's a probability. The probability here is half. All right, the probability here is half. So you're going to say if it breaks to the upside, then you take a buy on the retest. If it breaks to the downside, then you take a sell on the retest. But there are other objects that are straightforward. So that traders may remove, or when traders wanted to remove that uncertainty, now they came up with based on historical data, based on the statistics, based on the movement of the price in the past or in the previous. Traders have have analyzed these patterns, and then they have said they have categorized these patterns into bearish and bullish categories. Like, for example, so I'm going to be naming some of these patterns. Include some of these patterns may include, of course there are so many, include, I'm going to be naming a few. I'm going to be naming only a few. We have what we call flags. We have flags. A flag, it has a post, then the other part that you may call the cloth. So I'm going to be showing. So you have bullish and bearish. Of course, for the bearish flags, you buy, you sell. For the bullish one, you want to look for, the buys. These are things that I'm just going to be mentioning. You can go and do research on your own, but I'm going to pick two that I know they are very popular, and they also carry information going to the smart money concept. So I'll be trying to connect, but later in another video. Today I'll just describe the pattern. When I go to smart money concept, I will be talking about the interconnection that we're having with the particular pattern that I'm going to be training you today on this video, and the other concept that we usually call breaker block. So we have flags, we have rising and falling wedges, these things just funny. Number 3, we have what you call bottom double, not bottom, double tops and double bottom, double tops and bottom, double tops and bottom. Another one, we have what? These are so many, I'm just forgetting. Rising and falling wedges, flags, double tops, cup and handle, these things, cup and handle. Number 5, we can also talk about other things called hanging man, all these, blah blah, so many of them. So I just want to talk about number 3. I want to talk about number 3 only. I want to talk about number 3, and this number 3 is going to give us 2 videos. So for the beginning, I will talk about the double tops. Our video 1, we are going to be talking about double top. I'm going to be talking about double top. Then in another video, we will talk about double bottom. We'll talk about double bottom. Now, what does it mean to trade, or how do we trade these particular pattern? I still think that we need, or I can enlarge my board like this. Let me try. Oh yeah, I think now it's fair now. It's a bit bigger that way. Yes. So let's now talk about, or I put this one at this side. No, I like it when it is here. Correct. Yes. So we have double tops and double bottom. That is what I really want us to talk about in this particular video. So we start with double top, or double tops, then double bottom. This word is usually very, very interesting to mention at the double tops. Now, this is the SOP for trading double tops. Number 1 of the criteria, number 1 that you're going to be following: identify and mark 2 tops. Identify and mark 2 equal highs. Very important. 2 equal highs. This is now what you'll call tops. So I'm going to be giving notes as we do the illustration. Identify and mark 2 equal highs. Remember, you have to put a note here. What's wrong with my mouse? What's wrong with this thing? Yes. So equal doesn't mean equal. Equal here means same level, not same trend line. All right. I have to mention that, for example, if a price is moving in this way, this one you can still call it, if this is a week, you can still call this one equal highs. You can still call it equal highs. Remember, it is very rare that you're going to see price, reacting from a certain line or trend line in specific, like it taps there then goes down. No, you're going to see some little variations, and that variation in Forex we just treat it as outliers. Outlier means any figure, any constant that doesn't make any for those who are expert in mathematics, an outlier, you can ignore it. You can ignore the outlier and then move on with the points that will give you the maximum points lying on a specific line. That is an outlier. Now, number 2, I said that we are going to be doing illustration. So we are saying that identify and mark 2 equal highs. So we have something like this in price. Let's assume that is our equal highs. So this one is high 1, high 2. High 1, high 2. So this one is equal highs. Equal highs like that. We have H1, H2. Now, we already marked our 2 highs. That is now the tops. Number 2, what do you do? What do you do at your SOP number 2? Mark the mark the neckline. Mark the neckline. Neckline, this is the neckline. If that price is dancing at that point, then this one is a neckline here. That candle there, in many cases, it is a candle. You mark it like the way you mark your order blocks, but you mark it with this candle that is dropping here, the candle of the different color before this impulse movement. Before the impulse movement here, there are candles dropping here. So the other candle that starts pumping up here, you mark the previous candle, the candle of the different color. That is now your neckline. That is now your neckline. So at this point, let me use different color on this particular for the neckline. So you mark the neckline. I've shown you what is the neckline. Number 3, you wait. Remember, I told you in Forex, everything is wait and wait and wait. So we are back again at waiting. So what do you wait? You wait for, we call, actually, I call this one, for this one will be, I call this one leg. You wait for leg, 1, 2, 3, 4, leg 4 to break the neckline, with the body of the candle, with the body of the candle. In other words, we are saying close below neckline. Close below neckline. It has to close below neckline. Where do we need to cut? I think we can cut at that point. Yes. So you wait for the leg 4. Leg 4. This is our first leg, second leg, third leg, leg 4. This is now our leg 4, and we are saying we want to see this leg 4 breaking the neckline with body of the candle. In other words, close below. So what do you do at this point? Remember, this is our neckline. That is our neckline. So you want to see a price breaking below here with the body of the candle. After that, you drop to lower time frame for confirmation and entry. Drop to lower time frame. I think by now you must have known how you take your procedure in manufacturing a market entry signal. We have to make analysis on higher time frame, specifically in 1 hour. Then you drop to lower time frame. Mostly you want to wait for confirmation there, and you want to take your trades in lower time frame. So you drop to lower time frame, for confirmation and entry. For confirmation and entry. So what is a confirmation now? In the confirmation, you want to see this. Number 5, wait for a retest. For a retest to the neckline. Remember, yesterday we talked about support become resistance, or resistance become support. So this one was initially a resistance, so now it's going to become support. So wait for retest to the neckline. After that, wait for bearish engulfing candle. So this one tells you that double tops are for sales. NB, we sell double tops. That is NB that you need to note here, that we sell the double top. So what are we saying? On lower time frame now, you want to see price now approaching back your neckline. Then at that point, you take a sell. At that particular point. And then how do you take a sell? You wait for bearish engulfing candle or a rejection candle. I think that one is very important. You can also take a trade at the rejection candle. So because we are selling the double tops, why do we sell the double tops? We sell double tops because the price did not break structure here. The price did not move up, so we don't have higher highs and higher lows. At this point, the price has given an indication that it doesn't have enough momentum to continue moving upward. So this one is, two equal highs, two tops, or just equal highs. That is high 1 and high 2. This is our neckline. Leg 1, leg 2, leg 3, leg 4, breaking the neckline. Then we have the retest at this point. Then you take your entry when you see a rejection candle, remember we said the rejection candle looks like this. In this case, it's going to be, it could be red. Remember, the color here doesn't matter. So a rejection candle that can give you a good entry will look like this, or bearish engulfing candle. Bearish engulfing candle looks like this. That's a green one. Then we have an engulf. This one is now the green. This one is bearish engulfing candle pattern. In other words, oh no, this one is the one that is green. Sorry, let me correct myself. Then this one is the red candle. Yes, this one is bearish engulfing candle. Bearish engulfing candle. So you take your trade at the close of this, either at this candle, because you want to take your sell there, put your stop loss there, then your TP at that point. So you can take the trade either when at the opening of the next candle here, then you put your stop loss there, or you take your trade at the close of this bearish engulfing candle. Then you target down there. You target fairly down there. Let me engulf this there so that we can have higher risk to reward ratio in the illustration. Something like that. Something like that. So this is your entry. You enter here. Entry. So you enter at that point. Let me clone it and put it. You can also take your trade at that point. This is bearish engulfing candle pattern. This is bearish engulfing candle. This is rejection candle. This one is rejection candle. A rejection candle. Very easy. As easy as taking T. As easy as taking T. Rejection candle. So you take your trades when you see these two things happening. So we sell double tops. Let me repeat, guys. Double tops happen, actually, in most cases, they happen at the reversals, at the reaction points. Actually, I think I need to add that one. So double tops usually happens at major reaction points. Major reaction points. So what does it mean? It means that you are not just going to be looking at double tops everywhere. You don't just wake up in the morning and start looking at double tops under the bed, under your blanket. No, just go to the chart, look at the major reaction points or the major reversal areas. That is where you'll be able to find double tops. If the market is willing, or the market has given indication. Actually, double top is an indication that the market now wish to change direction, wish to change the trend from especially bullish to bearish. So why we are selling is because it is the double top that is going to give you the confirmation that the price is now headed to the downward. The price is now headed to the downside. So when you understand that, then it's going to be very easy for you to be able to trade these double tops. So any question, please put it on the comment section. Let's just go to the real market, and then we look at this one is a GC, that is GBP CAD. Let's go to 1 hour to identify our zones there. Then we can be able now to know where we can pick our trade. Now, interestingly, if you can look at this clearly, you find that this is equal highs. This is equal highs. The price is rejected at this point, and I've said they usually happen at major rejection points. And you can see this one we have, although temporary, this one is a bullish segment. Then after you see the double top, then the price continues down. The price continues down. So let's now do this example together. Let's do this example together. So this one is our high 1, high 2. What do you do next? Now the question is, do you mark this one as your neckline or this one as your neckline? Do you mark this one as your neckline or this one as your neckline? Personally, I'm going to mark this one as my neckline. That is now going to be our neckline. But listen to me. But in an event now, remember this one is odd. These candles are odd than this. And as the price still continues to go on, then you have this. Then you have this that you could also call the double top. This one is another 2 tops. This one is another 2 tops. Remember, I said that an equal highs and equal lows doesn't have to be exactly equal. Even people of the same height, they are not of the same points. One is 6.2, the other one is 6.21, like that. So then, if that is the case, then we'll mark this one as our new neckline. Let me change this color as our new neckline. Then you see the price breaks this one with the body of the candle, then makes a retest here. So dropping to 15-minute time frame, you want to see a rejection candle. Actually, here we have double confirmation. We have a rejection candle. Let me change this color to black. Yes, a very good rejection candle here. So at the open of this second, at the open of that second or the preceding or the following candle, then I open my trade there and then target this high as TP1, then continue pulling down. For those who want to wait for confirmation of a bearish engulfing candle, then you can trade at this particular you can open trade at the close of this particular candle here. That one is a bit complicated. Let me look for a easy one, but you followed through. You must have followed through. Let's go back to 1 hour. I like doing these examples. I don't do predetermined examples, so that you don't get confused. Wow, very good one here. Super beautiful, like those people who are watching this video. But men are never beautiful. So this one is our now the double tops. So what do you do next? You mark your neckline. Just mark all that, because here is what we call the order flow. The market was ranging here. So that is now our neckline. This is our leg 1, leg 2, neckline, leg 3, leg 4. So the breakout is here, and then the retest. We go to 15 minutes time frame, then try to manufacture an entry. After now this, I think you can now refine your neckline to such a candles so that you don't look to have a very difficult time. So personally, I would take trade at that rejection candle there. Although the price continued to dance around our area, almost hit the stop loss, but you can see the wait is worth it. Remember we said wait and wait and wait and wait. So as long as it has not hit your stop loss, just keep waiting. And this price is just going to give you this is 1:4. Finally you got 1:59. That is almost 1:6. So let me give you one more example, then we can finish this video. So we can look at AUDCHF, very unfamiliar pair. I know many people don't trade these pairs. You are just stuck at gold, NAS 100. But these are very good pairs that you can, you guys can really trade, and then they can really make a lot of sense to you. can really make a lot of sense to, because they are not very very volatile. It's very difficult for some of these pairs to really blow your account. The reason we are blowing is because we are just stuck at XAU USD. Now, this is AUD CHF, two equal highs, neckline. This candle here, your neckline. Let's determine the entry. Price action usually not very intact. Intact, I mean, they are not you remember the other example that you are doing, so you can now refine your neckline to that particular candle there. They are usually not very exact, so you see price, because trading of price action or trading of these patterns, you have to draw either rectangles or lines. And remember, I said no price is going to respect a certain or a particular a line or a particular you know, a reaction point. Usually price respects zones, and that is why I like, you know, I like the strategy that I'll be teaching you, the one that I trade using. I'm not saying that this one is inferior. I'm only telling you that it is not very exact. It is not very exact. Actually, even going with this one, I think this one is the best. We can just go on with this. So these candles there, those candles are these now, the neckline that we had marked. So the price comes, breaks through. This candle closes below, closes the body of the candle. That is, you know, it has satisfied our condition 2. Condition 1 is you know, marking, identifying this one. Condition 2, the neckline. Condition 3, leg 4, break with the body of the candle. Here didn't break, this one breaks with the body of the candle. So we have then the retest. Then even in 1 hour, you can still take the trade in 1 hour, because you can see bearish engulfing candle. Put your stop loss at that point and then continue down. You can see this is the money that you can use to go and pay your dowry. This is the money that you can use to go and pay your dowry. Now, this is now bearish engulfing candle. So we sell double tops. Whenever you see a double top, click it in your mind that it's time to look for sales. It's time to look for sales. And you know, trading doesn't have boundaries. You don't say that I trade that and that pattern, so I'm not interested into that pattern. No, you need to be a all-round person. Actually, you see, it is sold. It almost is sold until Jesus come. Yeah, that is 1:2. What is this? I can't read this. 1:11. 1:11. Oh no, 1:21. The ratio is here. The reward ratio is 1:21. Wow, that is really. But then you have to wait this one from 2 days. Holding for 2 days is not too much to ask. These are very good a strategy to use. So if you have any question in regard to this particular concept, you can just ask me on my comment section, or you can come directly to my website, micforex.co.ke, where I will take your questions. I'll take your question from there. You also get my number from there to be able to talk to me one-on-one. You can enroll for one-on-one training, whether physical if you are around my city, or online if you are outside. For those wishing to get the copy trading from me, the signals and everything that you think you might be of help, then you are most welcome to chat me on my website. You'll find my number there. Remember, I said at the beginning, you need a very good broker. You need a very good broker that is not going to exploit you, broker that is not going, to have unnecessary unnecessary damages into your account. Remember, we are all trying to add value, so you need a broker that with proper customer service and with very good execution and deposit and withdrawal terms, so you can think about trading with PU Prime. PU Prime is a broker that I am trusting, and I'm putting the link below this video, so you can open your account there. If you want a Prime account, you can also access Prime account through my website. My name is M.I.C. Money in Candles. See you later in another video. Bye bye.